Look around you, different things born out of truth and passion. Business software, it's our craft, our identity. Thoughtfully engineered, passionately designed to help you transform your business. Zoho, made in India, made for the world.
Welcome back to Markets at Noon. You're watching us on ET Now. Let's just get into conversation with Sachin Shah, Executive Director and Fund Manager at Emkay Investment Managers, to get a broader horizon on where the markets are headed, because the markets, no matter what kind of recovery we see at open, we continue to fall and we're absolutely flat right now, and that's the talk of the trade right now as well. So let's welcome on board Sachin and get an understanding of where the market is headed, what are some triggers at play over here. And Sachin, hi, good afternoon. Thanks so much for your time today. First up, want to get your general understanding on what you think the next big trigger for the market could be, because this time policy too on the MPC front, we're not expecting anything. We're in fact expecting status quo. What's your take on what could be the big trigger, because GST, festive season, they've not been able to excite the market so far?
Well, I think to say that the GST and the festive season hasn't been able to excite the market so far will not be a correct statement, because we've already seen a decent run up in the last few weeks. Of course, just the last 3-4 trading sessions, we've seen some bit of sell off, and there has been some consolidation of the markets. But my sense is that as we are now actually entering this festival season and the GST cuts playing out, whatever ground reports that we are hearing, clearly there is very, very strong demand coming. Even if you see some of the official statements from large auto companies like Maruti, the kind of the bookings that they are seeing or the kind of the inquiries, they all have grown 2x. So my sense is that in the next couple of weeks, as the actual numbers start flowing in terms of the volume pickup and the demand coming back, like even if you see some of the e-commerce websites, they are very clearly saying that this year the growth is in upwards of 25 to 30% YOY, as we are entering the festival season. So my sense is as the confirmations on those things come up, we should see a very strong uptick in the market also from there on.
That's right. Sachin, hi, good afternoon. Mansi this side. And yes, the domestic-oriented sectors are doing really good. The festive demand is another boost which we are getting, and the GST rate rationalization too. But at the same time, we do see a lot of volatility in the market. Now, do you see the consolidation, the volatility, or the correction in the market at present an opportunity to enter? And if so, what are the sectors on your radar?
Yeah, clearly we believe that, for investors, this can be a very good opportunity, because there has been some decent correction in some of the stocks. Say, for example, if you look at the financial services, I think they have underperformed in the last 1 or 2 months. And we believe that as this domestic consumption picks up, some of this retail finance, whether it's some of the private sector banks or some of the large NBFCs, they should be one of the biggest beneficiaries as soon as this discretionary consumption is going to pick up, or is already picking up actually, right? So private sector banking clearly is one of those things. I think even within the IT services, today the valuations have now corrected quite significantly over the last, I would say, 3 to 4 months. So from a purchase price perspective, I think there is decent amount of margin of safety over there. And we believe that over the next 3 to 6 months, earnings growth will also come back over there, as there is a lot of work in progress as far as the cloud migration is concerned, or in terms of making a lot of the large customers mainframe AI enabled. So tremendous amount of work over the next 3 to 5 years should play out over there. So clearly that's another big sector where we believe that there is a decent risk reward opportunity for long-term investors. Of course, other large companies in consumer durables, auto sector, and some bit also in the pharma sector, where we've seen some bit of correction in the last week after the announcement for the US tariffs. Although we believe there's not going to be significant impact, or in fact there's going to be hardly any impact on the domestic pharma companies. So we believe these are few pockets where clearly now there is decent price correction and there could be an investment opportunity for investors taking at least 2 to 3 years of horizon.
Okay, so sounding optimistic over there, but Sachin, what I also see from your portfolio is that you like cement as a space. Now, given the way the sector has been consolidating, there's monsoon demand, but on the flip side, there's also been a GST cut. Where do you think cement as a sector is headed, or cement prices are headed? Any light you'd like to throw on the cement space?
Right. So as far as cement is concerned, actually as a house, we are very, very selective about it. But overall sector, I would say that clearly in terms of the housing boom that we are seeing, and typically housing is a very large driver of the cement demand. So although this year the first half, I think the overall volume growth has not been very great, but I think in the second half, we believe that the volume growth is going to be significant, maybe as high as 7, 8, 9% volume growth. And with particularly with GST cuts, I think that should even further accelerate. So if one has to take the next 2, 3, 4 year view, and with the kind of the infrastructure capex and housing, we definitely it's a secular growth sector. So, but yes, one will have to be a little selective because this is more of a regional play. Sometimes, in terms of your, the regional demand supply imbalances also have an impact on the overall profitability of some of these companies.
Right. Sachin, thank you so much for giving your fundamental views on the market.